aware, Neeraj is partner to Nishant. So he's a CA by profession and he's also into financial planning. So he's also co-founder of Holistic Wealth, and more we will know from them only. So Nishant, let me come to you first, and I would request on your part also kindly introduce yourself to our audiences on something which I missed, and again how it started for you would be my first question for you.
So, Prince, basically, I started my career as an arbitrager. I used to deal between the price differences of the same security on different stock exchange. Infrastructure was provided by the stockbroker, funding was provided by the stockbroker. We used to share 25% of our earnings with the stockbroker. So before the introduction of software trading and algo trading till 2020, till 2012, I used to do arbitrage. Thereafter, I joined the office where I was supposed to manage the wealth of all the promoters, and I did it for 7, 8 years. Thereafter, I started on my own because I wanted to interact and help more and more people. So that is a brief journey about myself. So I started in capital market itself, and I'm associated with capital markets.
Yeah, great, Nishant. So let me go one by one. So Neeraj, how it started for you?
Yeah, hi Prince. Thank you for this opportunity. Firstly, so I started, from the time after I passed out as a chartered accountant. I got interested into personal finance because my father passed away that time, and I had to, take the responsibility of managing the family's finances. So that's when I got interested in personal finance. But otherwise, because I'm sure you also know that most chartered accountants don't really know how to manage their own money. And I was working in the audit industry from 2008 till 2020, mostly largely, focusing on accumulating enough money so that I can quit and start on my own. And I started in 2020. Nishant and I have been friends for 2, 3 years now. So he was also doing the same thing. I was doing the same thing. So we thought merging is better for us. It would provide a lot of synergies. We could use each other's knowledge to our advantages, right? So that's when we merged and started Holistic Wealth on 1st January 2022.
Great, great, Neeraj. So Nishant, let's start it from a very basic, like when it comes to personal finance, how I mean, how relevant you think it is for everybody, and how you have taking the initiative of taking, I mean, helping so many families account because it's a very noble cause. And financial planning is also want to see people take it very lightly when it comes to financial planning. Most of the people ignore it. Also would like to know your view. It should not be ignored, right? So yeah, over to you.
So personal finance is very important for everybody, whether the person is a businessman, whether the person is employed, whether the person is a professional. In fact, even if the person is an investor, then also personal finance is very important. It is associated with everybody's life, and it is very important to take care of the finances, not to do certain mistakes. Even if one can avoid certain type of mistakes, he will do well. Regarding helping the families and all, we feel very privileged to be part of. Currently, we have 125 clients, 125 families. Um, 90% of the families we are doing it by doing financial planning. 10% of the clients are like they just want to invest a particular amount and generate wealth. But 90% of the clients are in financial planning mode where all their investments are mapped to their respective financial goals. And in personal finance and in financial planning, not only investments, we have made sure that they have sufficient emergency fund, health insurance, term insurance, healthcare fund, and things like that.
Right, Nishant. So, Neeraj, as Nishant explained, you have 120 plus families with you. So, how easy or how tough it is to manage people from different background, different goals, and different mindset? Yeah. So, how, as a team, you try to work on that front?
That's a good question. So, people, if you can put people on a broad spectrum, right? Who there are people who are okay with any amount of return as long as they meet their financial goals, versus there are people who can't really see any drawdown in their portfolios and want high returns because of the recency bias. So it's sometimes it gets difficult to talk to people and keep them make them understand that bear markets are a feature of the equity, when you invest in equity. So what we do is, when we onboard clients, before onboarding clients, right, what we do is we run them through a presentation for 1.5 hours, right? And we tell them that any money that gets invested for long term goals like financial freedom or kids education, a decent amount of that portion has to be invested in equities, unless you're someone who earns a lot of money and can still meet the goals with by investing into fixed income investments. Most of us have to invest in equity, right? So we tell them to that volatility and corrections are going to be a part of this journey, by showing them lots of different data and different charts. So that helps a lot in bringing in handholding the clients later when the volatility actually comes. Recently, in the last few years, India as such has not seen big drawdowns except for the COVID drawdown. So we'll see when that time comes how clients react.
Right, Neeraj. We also have with us Ravindra, our co-host for today. He is a research analyst with over a decade of experience, and he shares very knowledgeable information on his handle as well. So, Ravi, in between, if you feel like any questions you have with our guest or anything like you add on to their input, so that would be okay with every one of we would appreciate that. So Nishant, so I'll come to you. Like, what is the thought process you comes to your mind? Like when see you are handling that many clients, but again, when an individual comes to you, it is he or she is unaware like how things pan out. As Neeraj was explaining, like you show them a presentation for I mean say 120 minutes or so, but how easy or difficult it is for you guys to convince them and to show them that, because see everyone is like um, the thrill, or basically as Neeraj was quoting for the bull market, right? Everybody wants to get rich quickly, nobody wants to do it slowly. So how difficult is so as to I mean make them understand the thing.
So, Prince, for any financial planner, constant handholding and educating their clients is a part of the journey. And whoever comes in becomes our clients, it becomes our responsibility to educate them about each and everything. Correct? So, this is number one. Number two, um, our approach is very client centric. We do not want to, I mean, we recommend products like NPS and PPA where there is nothing for the advisor, but still we recommend these type of products as well. The idea is to make sure that whatever investments are done, the financial plan is constructed in such a way that it is most beneficial for the client. So that is the approach we follow. We do not mind that even if we work on lower revenues, so that is not a concern for us.
Right, Nishant. So, Nishant, why not explain NPS briefly, and then if we have any follow-up questions on that, we can ask those questions from you. Because many people say they simply know it's a new pension scheme and that's it.
Mhm.
They're not about various kind of tier one, tier two accounts and what are the technicalities involved.
So I will just go back a little bit before explaining NPS. So till 2004, what was happening was our government was running defined benefit scheme. In defined benefit scheme, the government um, used to take care of for providing pensions to their to all the persons who retire from government jobs. So that is how it used to take. But then a report came which highlighted that if government walks this path for long, it will become a very big strain on government finances. So that is when National Pension Scheme was introduced. The idea was to switch from defined benefit plan to defined contribution plan. Now, what government is doing is for all the employees who have joined from I think 1st January 2004, government is contributing a fixed amount towards their retirement benefits. What will be the performance of that amount? Government is not concerned. I mean, market linked returns will be there. Whatever corpus is accumulated, the government employees can purchase an annuity or use that corpus as lump sum to withdraw. So when the person retires, it will not be. I mean, government will not be providing for anything except for healthcare. So no pension will be provided. So that is how National Pension Scheme was introduced. In National Pension Scheme, there are two tiers, Tier 1 and Tier 2. Tier 1 account is something where tax breaks are available. Tier 2 account is something where tax breaks are not available. To be honest, I am still not sure why Tier 2 account is constructed. It is not required. People are not required to invest in Tier 2, not required to even open Tier 2. And in NPS, people should invest that amount of money till when they can get a tax break. So let's say 50,000 rupees under section 80 D 1B and 10% of basic for corporate employers where employer is empaneled with NPS. So apart from these two contribution, I don't think there is any sense of investing in NPS. But within those two sections, a lot of tax planning can be done. So Prince, that was my brief answer about NPS.
Right. So, Nishant, so basically tax benefits you just explained, but when it comes to returns, so I mean, what is the, I mean, percentage of returns we can expect from NPS, or do we have any other thing which can be replaced, or it is like we have some certain allocation to it and other asset classes as well? How it goes when it comes to financial planning?
So NPS plays a very important role for planning the retirement and for the reason I am saying this that NPS plays an important role is because of the tax break on day one itself you can generate up to 45% of return. Why I am saying that? Let's say a person is in 30% tax bracket, he the 50,000 rupees amount if we invest or if we don't invest. If we don't invest, so let's compare these two cases. If we do not invest in NPS, he will get 35,000 rupees in hand. 15,000 rupees will be paid as taxes. Currently, I am ignoring cess and surcharge. Whereas if he invests those 35,000 rupees, the value of the investment in NPS becomes 50,000. I mean to say he will invest 50,000 only, the value will remain 50,000, but 15,000 rupees he has saved as taxes. So in a way, the person has only invested 35,000 rupees, which could have come in his hand. Otherwise, 15,000 rupees would have got paid to the government of India as taxes. So 35,000 rupees become 50,000 rupees on day one, which is a return of close to 45%. So that is why it makes a lot of sense, and that is why NPS plays a very crucial role in planning for goals like retirement and all.
Okay,
And
Nishant.
similar will be the
Yeah.
calculations for 10% basic and that for corporate employees.
So, Nishant, basically, it is for government employees only, or like anyone can open their tier one or tier two account? I mean, it is for.
So there are three heads in which NPS account can be opened. Number one is government employees. I will not talk about the government section because everything is mandatory there. There is no choice, and if there is no choice, there is no point discussing it. Two other heads are number one is All India citizen and corporate employees. In All India citizen, anybody can open an NPS account, whether the person is a housewife, whether the person is a CEO of a multinational company, whether the person is a doctor, whether the person is a professional or whatever. Anybody can open the account. But under corporate scheme, only those accounts can be opened where the employer also is empaneled in NPS.
Okay. So Neeraj, you have any additional points on that?
Yeah, so on the corporate side, so once since we from the time we started working with clients, we noted that most corporates don't really have themselves empaneled with NPS. So in a few cases, we asked our clients to talk to their employers and get the employer empaneled with NPS. Because see, for people, so 50,000 contribution may not make a big difference for someone earning 20 30 lakh rupees in a year. But if you're earning 20 30 lakh rupees in a year, and if you're able to if the employer is able to contribute 10% of your basic salary every year, you end up saving a decent amount of taxes under section 80 ccd too, right? So that's when it makes a difference for people who are earning a lot of money. And anyways, you have to save money for your retirement, so why not do it through this route? One downside is that you have to buy an annuity at the age of 60, which you can defer till the age of 75. But again, regulations could, a lot of changes have happened in NPS over time, and we are hopeful that this will also change.
Right. We have two speakers with us. Let's take their question in between. Yeah, Mukesh ji, you can mute करके पूछ सकता है. Mukesh Goel ji, please unmute and ask your question.
Yeah, boss, this actually, I have an NPS account, NPS Tier 1 and Tier 2 both. Tier 1 earlier, actually, I left my organization, previous organization, and previous organization, there was an employer contribution as well as employee contribution. But now I switch over to my organization, and my new organization does not have this employer contribution, okay, ATCC one day. So I'm pushing with my HR team to implement this, but they are not interested actually. Basically, that they are saying that it has to be implemented for all employees, not for you alone. But what shall I do? And how to go ahead with this?
So if your new employer is not empaneled with NPS, you will not be able to take benefit of Section 80 CCD2. But you can still keep on contributing 50,000 rupees under Section 80 CCC, Section 80 CCD 1B. That you can keep on doing, and you can request your HR to empanel with an NPS. So basically, HRs are lazy enough not to do that. If 4, 7, 10, 15 people approach them collectively, then they will definitely empanel because it will
Yeah,
not be any extra cost for the employer.
yeah, and secondly, it's not mandatory for all the employees to contribute to NPS through their employers. So it is optional. So again, your HR is not very clear about it, as far as I know.
Yeah, because no, I'm investing for 50,000. That is separate. That I'm continuing. But problem is that how to convince them because they are not agree. They
Correct.
are thinking that it's a burden for them.
No, it's very easy to get the employer empaneled, right? So again, laziness is the only factor that we have seen so far, because we have gotten 2 3 employers to empanel with NPS, right? So it's not difficult. The only challenge is that they should do it, and if like Nishant said, if you approach it as a group, say if you can make 20 to 30 of your colleagues agree to approach them and write to them, probably they'll do it. As an individual, they may not.
Yeah. So can you suggest someone? Then I can tie up with the corporate account with the someone. Can you suggest
Maybe
someone?
we can take this offline maybe, and discuss what you could do. Maybe you can have someone, have your employer talk to someone and do a presentation for them. That would help, I guess.
Okay. 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 Thank you.
Thank you, Mukesh ji. Next question is Sambai Kilaru. Uh,
Yeah,
Sambai, you can go
yeah,
next. Yeah.
thank you. I have couple of three questions. One, I mean, actually, first one is I am contributing via my corporate 10% of basic. Even 50,000 also I can add up from my pocket and I will get benefit of income tax.
Yes, that's right.
Yeah. Second question is it is automatically allocated is it advisable? I mean, from advice, I mean, having financial advisor and some switching of the
No, so
scheme.
you don't really need a financial advisor just for NPS. There are two options. One is an auto choice and one is an active choice, right?
Okay,
So even for the employer's contribution, basically both the accounts are same. So what you can do is you can just log in and change the allocation from auto to active, and then select your
okay,
allocation.
okay, got it. Third problem I see is it is more risk point of view. Our governments are not very good in terms of okay, today we have policy and we are contributing NPS. So this policy exists for next because we are under the current rules we are actually giving NPS. So this will continue, but next year, I mean, that is not our government do. Most of the times every year they try to modify the policy and all. This I see a big risk in terms of any government lock-in based schemes. I think this is a big risk, I feel.
But this big risk is applicable for everything, be it fixed deposit, be it PPF, be it EPF, be it mutual funds. Even for equity investing, any change in government policy can affect um, a particular sector or particular company. So this risk is always there in everything. Government can increase the direct taxes. It can affect all of us directly. So these things which are not in our control, we should not worry about it.
Thanks.
Parimalji, you go next.
Thank you for the opportunity. Good evening, all. So I had two questions basically. So I quit my job. I mean, 6 months back. I had my NPS contribution on as from my basic salary and 50,000 for last 4 years. So can I withdraw it now, or I need to wait till 60 years? I mean, I am not joining any job as of now. So can I withdraw it?
So NPS is not like EPF where if you are not working for 2 3 months, then you have the option of withdrawing it. NPS is totally different. The idea of NPS is that in old age, you should have a corpus, and that is the same idea where 40% of the corpus is required to be invested in annuities so that you have a stream of income. So that is the idea of NPS. So you will not be able to withdraw anything unless and until you have taken VRS. In case you have taken VRS, then you will have the option of withdrawing. 20% you will get at lump sum and 80% of the amount will be used to buy annuities.
But Nishanji, I was not in a government job. I was in a working with a private telecom company, and I have quit on my own terms. I mean, and I would not be joining any job. So, is there a way out in there?
No way outside NPS tier 1, you have to wait till 60 years of age and you can keep on depositing 50,000 rupees every year to avail tax benefit.
Acha. Then I have a second question, Nishanji. See, overall, NPS has not given, I mean, I would say good returns. I mean, max 10, 11% over last 3, 4 years. So how do we maximize returns? So you keep the income tax benefit out of that. Even in the downturn, I mean, you had a good chunk of your money, 40% invested in equity. Still, the returns were not that good. I mean, those were in early double digits. I mean, 11 or 12%. So how do we maximize returns in this case?
See, in NPS, it is not like mutual fund where you have the choice of allocating the money to large cap, mid cap, small cap, or value funds or growth oriented schemes. There is no option. This is point number one. Point number two, NPS investing, in my opinion, is done just to avail tax benefits because tax benefits are very significant and you should not ignore tax benefit while calculating NPS returns. The 10 11% with 45% return in year one, that is a very good return. And there is no instrument which has the capability of matching these kind of return.
No, so you
Because
also,
on day one, for you are ahead 45 rupees as compared to any other instrument.
yeah, even if you forget the tax benefit that you get, if you see last 3, 4 years, we were in a low interest regime, right? And the whatever, if you even if you are maxed out your equity allocation to 75%, 25% was still invested in corporate or government bonds, right? So where the returns were low, so obviously the weighted average return will be lower, right? So that is also something that you need to consider, right? The interest rates have gone up in the last 1 year only.
So Nishanji, what is the max I can invest in equity? 75 or
Yes,
40?
up to the age of 50, it's 75%.
Okay, and can I do it myself now? I mean, yes,
Yes,
this question was asked, so I can do
yes,
it
you can
myself.
do it. Correct. Yes, you
Mm.
can do it.
Achha, can I switch my funds? So I am currently with Kotak. So can I switch it to say an HDFC or someone else?
Yes, you can switch.
Okay, that can be done online by myself, right?
Yes,
Yes, you can do it yourself.
Thank you so
everything
much,
can be
Nishanji.
done
Thank you so
online.
much.
You don't need to consult anyone.
So
Oh,
once in a
thanks,
year,
Nishanji. Thanks, Nishanji.
once in a year, you have the option of changing the pension fund manager, and 4 times in a year, you have the option of changing the asset allocation.
All right. Thanks, Nishanji. Thanks, Neerajji. Great help.
Thank you.
So, Neeraj, by default, what allocation they do if a subscriber doesn't do on his or her own?
So there are, as far as I remember, there are three default options: aggressive, moderate, and conservative. Nishant, is that right?
Preet, I will answer this question in 2 3 minutes. I am checking. To be honest, I do not remember this, but there is a default option, surely.
Yeah, there are three different options as far as we remember. But ideally, yes, for a young person, what we recommend, someone in their 20s and 30s, and the retirement being 20 30 years away, what we recommend is selecting the active option and maxing out the equity to 75%, and for the balance, just investing in government bonds.
Right, Neeraj. So, SK, you can unmute and ask your question.
So, good evening. Thank you for giving me this opportunity. So, like has been discussed, I have already maxed out my equity to 75% with my the active choice. Now, I have a doubt that I don't understand this corporate and the government sector. How we can maximize what should be the even like 25%? If you can suggest what should be the ideal allocation to get maximum returns.
So, see, government bonds come with a sovereign guarantee, so that is, almost risk free. So, and corporate bonds will have largely AAA rated securities. So it is up to you where you want to invest between government versus corporate bonds. The difference in returns is not going to be significant because again the money is invested largely in AAA rated securities, wherein the yields are similar to government bond yields.
Thank you.
Thank you. Anything we missed on NPS you guys want to cover, or shall we move on to mutual funds?
Not really. Nishant, anything you want to cover?
So in NPS as well, what we have observed with some of our clients is if you are 25, 26 years old, and there are certain short-term goals which are standing right at the doorstep, and you need to provide money for them. So it will not make sense just to invest in NPA just to save taxes. You should focus on the short-term goals which are just there. For example, marriage of your own self. For example, education of a younger sibling, healthcare costs for parents, things like that. So NPS is not a must thing. You can start doing it even 2 3 years later. First, you should focus on short-term goals. You should maintain enough balance between liquidity, tax saving, long-term investing, and tax saving.
Correct. Also, on the same lines that Nishan mentioned, for a young person, largely he may be in 10% tax bracket only, so he's not going to save a lot of tax also, and it makes really no sense in the early years to lock in a lot of money because if you're earning say 7 8 lakh rupees in a year, you invest 50,000, you have invested almost 10% of your income there. So that is also something that one must consider before locking in money in that.
Right. So, guys, before coming to Mudit, I have one question because many people ask this. There is one scheme of Sukanya Samriddhi Yojana, right? You might have heard. So basically, people are clueless. So they were asking like, should they allocate the maximum amount to that? Would that be a good investment, or there could be other kids, especially the girl kid, because the scheme is for girl kids only.
So only those persons can invest who have a girl child and before she attains the age of 10 years. Only those people can invest. Whether you should maximize it or not, it will something depend on the overall finances of yours. I will not be able to comment on it, but I will just give you a brief answer. If you have a lot of surplus money, then you can maximize it.
Because as an instrument, it is a great instrument, right? It is almost equivalent to a public provident fund and employees provident fund, wherein you get tax-free returns and triple E benefit, right? So that way, it's a great instrument. But someone should maximize or not, again, depends on the liquidity position of the person. Because you also have public provident fund to invest in, then you have your employees provident fund, other investments, equity investments to make, right? So then this becomes a choice that someone has to make. If someone has the choice between, say, PPF and Sukanya Samriddhi, then you can always opt for Sukanya Samriddhi and not opt for PPF if you have limited funds available, because the returns are a little bit higher in this.
Right, right. So Mudit, you can unmute and ask your question.
Hello everyone. I have a very simple question to ask. So I we have 1.5 lakh as our ATC limit, and then 50K above that. So that is if taken care of. If there is another 50K put in via the employer route, so additional benefit would be on that 50 lakh as well, 50K as well.
Yes, there will be additional benefit as well. So I will just explain it one more time. 1.5 lakh rupees ATC that is available through various modes. Tuition fees paid for the kid, housing principal repayment, stamp duty for purchase of house, PPF, PPF investment, national savings certificate, employees contribution towards provident fund. So there are various things in which 1.5 lakh rupees can be availed. For the additional 50,000 rupees, that can only be availed through NPS, 80CCD1. It is 80CCD1B. It is the contribution made by self. The another 50,000 which you are talking about, this is not the limit of 50,000 rupees. This amount will be subject to 10% of basic plus dearness allowance. And that contribution has to be made by the employer. So the employer will adjust this contribution within the CTC, but you will get this as a tax-free thing. And there is a cap on this. The cap is for 7.5 lakh rupees annually. So three things collectively have a 7.5 lakh rupees cap. Number one is employer's contribution towards provident fund. Number two is any contribution towards superannuation scheme. Number three is contribution made under section 80CCD2 towards NPS. All three collectively has a limit of 7.5 lakh rupees annually. In case the contribution is more than that, then it will be taxed.
Okay. So for a layman language, if all these things align, I get a total tax benefit of 2.5 lakhs, 1.5 plus 50 plus 50.
The last 50 which you have said that you can claim up to 10% of basic and DA.
Yeah, I understood. But considering it's 50K,
Yes,
it
okay.
is
If your basic plus DA in an
It's
annum
5
is 5
lakhs.
lakh rupees, then you can claim 50,000 rupees.
right. So it's 2.5 straight, which I could
Yes,
benefit of.
yes.
Okay, thank you.
So, Prince, someone mentioned that we don't have a view on NPS tier two. So, tier two largely, you have to figure out why are you putting your money in tier two account, because there are no inherent benefits of putting it in tier two versus a mutual fund. That drought, there is only a downside that we see, because there is no clarity on the tax regulation also in tier two account, right? We don't really know how it is going, how it is taxed. And Nishant has done quite a bit of research on this, and still there is a lot of ambiguity on this side.
Neeraj, even if taxation is clear, then also, see, I will talk about four regulators. Number one is SEBI, which is managing the investment world where one can invest. Number two is IIDA, it is related to insurance. Number three is PFRDA, it is related to pension. And number four is RBI, where all the banks are governed, where you make fixed deposits and all. When I talk about all those four regulators and talk about their roles and everything, anything which comes under SEBI, you should invest there. Anything which comes under PFRDA, you should invest just for the sake of tax benefits and pension, not for long-term investing. Number three is IRDA. Here you should only take insurances. You should not give your money to insurance companies to manage. For example, ULIPs or traditional insurance policies. So that is how you should think about your finances. Tier 2 has no meaning. Tier 2 is absolutely rubbish. I even do not know why Tier 2 is launched. There is no point investing in Tier 2. Only thing is you can invest any day and you can exit any day. So there is no exit load. But the problem is in Tier 2 is that you will not get any option to choose your strategy. Large cap fund, mid cap fund, multi cap fund, flexi cap fund, or things like that. The portfolio is actively managed at a very low cost, which is a concern for me.
Right, Nishant and yes. SK, you unmuted. Do you have any question or?
I have one more question. Like, I have 50,000 rupees and I have a choice between PPF and NPS. I'm 45 years old. So, which will give me a better benefit in the long term?
So PPF gives you tax benefit under Section 80C, and NPS gives you tax benefit under 80 1B. So you have to see if you have not exhausted. So and employees' contribution to NPS gets the tax benefit under 80C. So this 50K contribution will get you the contribution benefit under 80 1B only. It won't get you any benefit under 80C, right? So this is completely your call. uh, the investment that where the money gets invested in PPF, it completely gets invested into fixed income investment side. So you only get a fixed return. In NPS, you can opt for equity as well. Anything you want to add, Nishan?
So what you have said is absolutely correct. So if you have already exhausted the 1.5 lakh rupees limit, then investing the incremental 50,000 in PPF versus NPS, NPS will make much more sense because it will save you some taxes as well.
Okay, thank you.
Thank you, SK. So, guys, now we'll be moving to questions on mutual funds. So, anyone who has any questions on mutual fund, next 20 minutes are for mutual funds. Feel free to send in a request or type in the comments. So, Neeraj and Nishant, like people are, when they talk about market, they always have a thrill of equity, right? For mutual funds, don't give returns as I mean, say if in a bull phase people buy some stocks and due to luck the money fascinated away, right? Then mutual fund that doesn't happen. So how we should see mutual fund and what are the benefits of doing the mutual fund investing? Yeah, over to you.
So Neeraj, would you like to take it or shall I answer?
You can start, Nishant. I'll add.
So if I talk about advantages of mutual fund, there are multiple advantages of mutual fund. I will start with structure. Number one thing is if you have given money to mutual funds and bought some units, you will not be taxed till the times you sell the unit. Mutual fund manager can sell the stocks and buy stocks multiple times, whatever dividend income they are earning from the underlying portfolio, it will not be taxed. It is a straight pass through status, and you will only be taxed when you sell the units you have acquired. So, number one benefit about mutual fund is that you can defer the taxation for longest of periods of time. So, if you are 30 and you have invested today something and you are not redeeming till 60 years of age, you can defer the taxation for next 30 years. Number two is um, professionalism. So, when you give your money to a mutual fund, whether actively managed or passively managed, your money is invested in a number of companies, which you cannot do so if you have a small capital base. Let's say you have 10,000 rupees only. So you cannot diversify those 10,000 rupees in 30, 40, 50 companies, because you will not be able to buy one share of 30, 40, 50 companies. Let's say you buy one share of Reliance, so 2,500 rupees will be exhausted. So you can buy only four shares of Reliance, or one share of Reliance, one share of Infosys, like that. You will not be able to diversify in 30, 40, 50 companies. In a mutual fund structure, even if you invest 1,000 rupees, you will get proportionate holding of the mutual fund portfolio. So that is a very big advantage. Number three is transparency. Mutual funds in India, I think in whole world, if I compare the mutual fund regulations and structure, the regulations and the how SEBI has come up with new and new regulations for transparency and safeguarding retail investor, the structure is best in India. So there is lot of transparency, lot of regulations that how much risk a fund manager can take. So in that way, you are investing in a very well regulated instrument. So these are some of the advantages of mutual fund. I can keep going on and give you more and more advantages. For example, next advantage is low cost. If you have 10,000 rupees and let's say you are paying an expense of 2%, so that is only 200 rupees on annual basis. If you want to manage your investment on your own, you cannot hire a fund manager for 200 rupees. But by giving it to a professional through mutual fund, your money gets managed only for 200 rupees.
Right, Nishant. So Neeraj, you have any additional point or
I think Nishant has covered everything. We
okay?
can move
So
on.
before coming to Prathamesh, I have one question. Like, see, initially when it comes to mutual funds, so people also go by say the historical returns which has been given by the mutual funds, right? But the historical returns doesn't mean that the. So what are the checkpoints or what are the things to look for before zeroing in on your investment in any kind of mutual fund, and how one should go about like which kind of mutual fund is suitable for a person?
So, Neeraj, I will take this question.
Yeah, okay, okay, Nishant.
So past returns is never a good indicator. It can be one of the indicator, but it should not be the sole indicator. So there is a return published by Motilal Oswal Wealth. There is a research paper published by Funds India where they have calculated that a fund which is a quartile one fund on 3 years, in subsequent 3 years, only 30% of those funds are in quartile one. So the study paper emphasizes that if you have selected the fund based on past performance only, it may not be a good idea. Now, how to go about is that you first have to see what your investment horizon is. If you want to invest only for 5 7 days, let's say you are a corporate treasury, in your current account you have a balance of 200 crore rupees, for which you have to make a payment to your suppliers after 7 days. So you can invest 200 crore rupees for 7 days. Then suitable category will be overnight funds. So you have to first figure out which is the suitable category for you to invest in. If you are a new investor who has never invested in equity market, so I will advise the person to start with balance advantage fund and take a flavor of how equity investing works. Because if you are going to straight away invest in a small cap fund, the volatility the person may not be able to digest, and he may be exiting at the wrong time when markets are not doing well. So first thing is that you have to choose which category to invest in. If
So
you have
yeah,
figured out,
so goal setting is very important in this case, right? So first you need to figure out why are you investing your money before even considering mutual funds or any other instrument that is available, be it fixed deposit or a public provident fund, right? So understanding the why behind the money is very important because in most cases, a lot of cases, we have personally seen this, that people have invested money in equity and they need the money in the next 6 months or 1 year, right? Because that the past 12 months and past 3 years returns have been looking very good, without the knowledge that equity markets are volatile and a lot of damage can happen in the near term. So you need to assign your investments to a goal, and then based on that goal, put your money in the respective mutual fund. So selecting a mutual fund is all second step in the whole process.
Right. Yes. Pratmesh.
Hello.
Yeah, Pratmesh.
Yes,
Hello.
we can hear you.
या सो माय क्वेश्चन इज कि मैं ना जीरोदा से म्यूचुअल फंड में इन्वेस्टमेंट करता हूँ. एंड द थिंग इज कि जब थोड़ा सा मार्केट में वोलेटिलिटी आता है तो मैं उसमें बाय बाय मोर का जो ऑप्शन है उससे ऐड करता हूँ. और जैसे भी मंथली मुझे अमाउंट आए तो मैं ऐड करता जाता हूँ. और नॉर्मल जो एस आई पी है वो तो चली रही है डेट की, जो फिक्स डेट है मेरी. तो पहले तो मतलब इज दैट अ राइट स्ट्रेटेजी, और इससे कोई नुकसान तो नहीं है ना? क्योंकि ऐसा किधर मैंने देखा नहीं जीरोदा पे या किधर मेंशन कि इससे कुछ मतलब आई एम नॉट एग्जैक्टली लाइक श्योर लाइक कि उससे मेरे को कुछ मतलब डिसएडवांटेज तो है या नहीं ऐसा. मतलब वो पैसा आएगा ना, राइट? मतलब वो यूनिट तो अलोकेट होते हैं, लेकिन एट द टाइम ऑफ रिडम्पशन उसका कोई इशू तो नहीं आएगा ना? बिकॉज many dates are not like exact SIP dates. Some dates are मतलब monthly 4 times I am averaging, or sometimes it is just 4-5 months just on SIP dates. So मेरे को वो थोड़ा सा कंफर्म करना था या पूछना था कि how it works.
तो कोई फर्क नहीं पड़ेगा, चाहे आपने लमसम इन्वेस्टमेंट की हो, चाहे आपने एसआईपी के थ्रू इन्वेस्टमेंट की हो. एसआईपी सिर्फ एक ऑटोमेशन टूल है जहां पर आपकी मंथली सेविंग्स चैनलाइज करने का ऑप्शन होता है आपके पास. आपको कोई चैलेंज नहीं आएगा, आपको यूनिट्स अलॉट हुई हैं. आप जब भी रिडीम करोगे तो उन यूनिट्स की जो भी नेट एसेट वैल्यू होगी ऑन द डेट ऑफ रिडेम्पशन, यू विल गेट द रिडेम्पशन प्रोसीड्स अकॉर्डिंग टू दैट.
So I
देयर विल
can
नॉट बी एनी
purchase.
चैलेंज.
So I can purchase units many times, right? In a month
Yes,
or in a
yes,
week.
yes, yes, yes. You can purchase as many times as you want. There is no problem with that.
Oh, okay. Okay, thank you. यही मुझे just confirm करना. Thank you, sir.
Ratilal, you can unmute and ask. Parimal ji, you can go next.
Hello, am I audible?
Yeah.
Yes.
So I had two questions basically. A lump sum इन्वेस्टमेंट ज्यादा बेटर रिजल्ट्स देगा या एसआईपी ज्यादा बेटर रिजल्ट देगा? इफ आई एम टॉकिंग ऑफ लॉन्ग टर्म, ऐसा कोई स्टडी है क्या? नंबर वन. नंबर टू, पिछले 1 सवा साल में देयर हैज बीन लॉट ऑफ वोलेटिलिटी इन द मार्केट. सो जैसे मंथली सिप के साथ यू कैन डू डेली सिप्स, वीकली सिप्स ऑल्सो. सो वेदर वीकली सिप विल गिव अस बेटर रिजल्ट दिस टाइम, उस पर मेरे को थोड़ा सा आइडिया चाहिए था आपका. सो टू क्वेश्चन बेसिकली, whether lump sums gives better results in mutual fund, and secondly, will weekly SIP be a better alternate right now to counter the volatility?
तो मैं पहले आपके फर्स्ट क्वेश्चन का जवाब देता हूँ, लमसम वर्सेस एसआईपी का. So lump sum is better when you think that markets have corrected a lot or markets are trading at a fair valuation. Let's say in March 2009 or March 2020, when markets have were already corrected by a very decent amount, then lump sum investments would have yielded better returns. But it is very difficult to gauge whether markets will correct more or not. So in the short term, to gauge whether to make lump sum investments or to invest through SIPs, it's a very tricky question because markets can still correct further. I will answer this question considering um, the market of today. The market are today of somewhere close to 17,200 Nifty level. If I say that you should invest lump sum and market straight away go up from there, then you will say that the decision was right. But if market stays there or keeps on correcting, let's say till 16,000, then SIP would have made much more sense. So lump sum versus SIP is a very tricky question. It is about market timing. But as far as returns are concerned, so somebody who invested at the 2008 top lump sum money returns till 31st December 2021, 9% annualized. And somebody who invested at March 2009 lows, the returns are somewhere close to 18%. So it's very difficult to say whether to go for lump sum or for SIPs.
Yeah, but one more thing to add here is that irrespective of whether you started your SIP in January 2008 versus March 2009, we have seen that the returns have been similar. So largely SIP is a better strategy. One more thing to note is that what do you call lump sum investment, right? When you compare it to your overall net worth, if it is 1 to 2% of your net worth, is it going to matter in the overall scheme of things? And your overall returns is something that you must understand and figure out. Largely, it does not make too much difference when the lump sum money, which is 1 to 2% of your net worth, is what you want to invest. But if it is a significant, say 20 to 50% of your net worth, then it is something that you need to spend a lot of time in deliberation, discussion, and thinking.
Okay. I mean, yeah. So I had a third question also, if you could answer. So I had a small third question also. I mean, so I was asking about weekly sips.
So
Weekly sips,
whether
again,
you weekly,
sorry, Nishant, you continue.
so whether you are doing weekly SIPs, monthly SIPs, or daily SIPs, there is a research published for this as well. The returns will not be much different. The returns will be very similar.
Okay.
This was published by LiveMint recently, I think, in this month only or last month. So you can
Correct.
check that out. I will also share it with you. And one more thing to say is again, in the same strategy. Say you are doing an SIP of 10,000 rupees today monthly, and your net worth is 10 lakh rupees. So whether you split it in 4 weekly installments or 1 monthly installment, not going to make any difference to your overall returns, right? So everything depends on first you need to zoom out and see from a broader perspective, and in percentages, how much are you investing, and is it going to make difference to your overall returns or not?
So in personal finance pyramid, if I talk about that, four-fifth of the pyramid is all about tax planning, cash flow management, insurances, goal planning, and all. And only one-fifth of the personal finance pyramid is about timing the market or security selection. And the problem is people waste all the time about one-fifth of the pyramid. They do not spend the time to manage four-fifth of the.
Okay. So last question, Nishanji. I was just going through, I mean, mutual fund में थोड़ा interest है, and generally since with advent of so much of data, people try to get intelligent. So I just went through a data. So I want your views on this. So what I found was uh, uh, the worst performing small caps have better results than best performing large cap funds over last 10 years. Okay. So Mirai, say for example, was the best performing large cap fund, but it performed as good as the worst performing small cap fund. So my question is, agar my horizon is say 10 years for SIP or investing in mutual fund, is it better to invest in small cap slash mid cap funds rather than ELSS or large cap funds or say a flexi cap fund?
So Parimalji, all depends on the starting valuation. If you have invested on January of 2018, you have invested in small cap funds versus the large cap funds. After 10 years, large cap will be better one because the valuations of small cap was very unfavorable. And the point you are referring to about 2012, 2013 period, small cap and mid caps were very undervalued at that particular point of time compared to large cap. That is why the data is biased towards the starting point. There have been research which showcase that large cap, mid cap, and small cap have given similar returns.
And sir, from a psychological point of view, I focus a lot on psychology. So from a psychological point of view, we should see the volatility in a small cap fund versus a large cap fund, right? So volatility is very high in small cap funds. You would have seen in the 2018 crash in small caps, and then again in 2020 we saw similar higher drawdowns in small caps, right? So if you invest a big portion of your total net worth in small caps, will you be able to sleep well at night or not, is something that you should consider.
तो नीरज जी फिर लास्ट क्वेश्चन पूछूं.
हाँ हाँ सर, पूछिए सर।
सर मेरा फिर क्वेश्चन ये है कि देन फिर आइडियल एलोकेशन क्या है? सो इफ आई वांट टू इन्वेस्ट इन 5 funds, so I'm not asking about the specific fund name, but then what should be an ideal allocation then? I
It
mean,
depends. It depends on your age, firstly, your risk appetite, your goals, right? अगर आपने, if you've already met your financial goals, then why do you have to take any risk whatsoever, right? You can say, park your money in large cap funds and fixed income investments and live your life comfortably, right? So, उसके बाद क्या चाहिए? So, it depends on all these things, sir. Sir, from
नहीं मेरे
psychology,
so my
हाँ.
risk appetite is say high, और अभी
See,
I
so
mean
then
I
you,
mean
so if you think that your risk appetite is high, please go ahead and invest in small cap funds. You can have a larger investment in, say, instead of say doing a segregation between small, mid cap, and large cap, you could have, when you, from your total net worth, what you could do is you could have higher allocation to equity instead, and then between equity you can decide how much you want to put in large caps, how much you want to put in mid caps, how much you want to put in small caps, or if you just want to put in a flexi cap fund and let the flexi cap fund manager do his job.
Thank you, Parimal.
so I mean so फिर ideal allocation should be between 3-4 funds. I mean I'm just asking.
Yeah. So between 3 to 5 funds, allocate your money.
Okay,
See,
cool then.
again, this also depends on if you're whether you are investing yourself or through an advisor, because an advisor will give you that kind of portfolio, right? If you are doing yourself, then if you believe if you're investing in active funds or passive funds,
No, no,
passive funds, then
I'll go through
yeah,
an advisor only, but what I have found is generally advisors are investing in 10, 12, 13, 14, 15 funds. I mean, I have not seen an advisor
no, we don't
giving
do
me
that,
advice
sir.
to invest in 3 to 5 funds.
No, we don't do that. We don't. Our number of funds that we recommend is very limited, sir.
Hmm.
All right. Thank you, Neeraj ji. Thank you, Nishant ji.
Thank
Great
you,
help.
Parimal,
Thank
for
you.
your questions. Yeah. So we have Sumit with us. So Sumit, last question from you. Yeah. Uh, you can ask, unmute and ask.
Uh, Hi, am I audible?
Yes.
Yeah, so my question relates to mutual fund versus ETF. If you could just explain and help us, give us a short comparison as to when we can use ETFs as a tool for investment versus mutual fund.
You have asked mutual fund versus PPF, public provident fund.
No, no, exchange traded fund, ETF.
So first of all, ETF is a kind of mutual fund itself. ETF is within the ambit of mutual funds. The only difference between ETF and a normal open-ended fund is that ETF can be purchased during the market hours, and there will be multiple price points for which an ETF can be purchased on one single day. Whereas in mutual fund, there will be only one purchase price and selling price on which transactions will happen. That will be decided on the basis of closing of the market. In ETF, you can take benefit within the market as well, within the course of the market, within trading hours as well. I do not advise any of the retail person to invest through ETFs. There have been times where I have noticed that ETFs are trading at 7, 8, 10, 12% premium with respect to the fair NAV, INAV of that particular ETF, which is published on the AMC website and which keeps on updating every 2, 3 seconds. So there have been instances where ETFs trading price is higher by 7, 8, 10%. So I will just give you one example. During COVID crash, there was a day when market corrected to 8,500 and then went back and closed above 10,000. I'm talking about Nifty. So somebody bought ETF at 13,000 Nifty level on that particular day. So that is why I really do not recommend any retail person to buy ETFs. He can buy index fund if you want to take a passive approach, but not ETFs.
Great
Okay,
input,
sir, thank
Nisha.
you.
So any other questions, Sumit?
No, that's all from my side. Thank you.
Thanks for your question. So Neeraj and Nishant, one last question from my side, and then in the end, I would also request you guys to, if you would like to talk about the holistic wealth, so you'll be discussing that. So the question is like we often get this question: the people who are in their 30s or say mid 30s, and they are married and they started their family, they have one or two kids, so they are clueless about their financial planning. So what is the one thing, and even see when it comes to financial planner, so people are not comfortable guessing who is a good financial planner or who is not. So basically, would like to know your views on that.
So Neeraj, would you like to take this?
Yeah, I can take this. So, see, who is a good financial planner and who is not a good financial planner is again, very subjective. You can find a financial advisor for yourself either directly by searching online or through references, people who have already experienced with another financial advisor, right? So, see, what we do whenever we go out in the market to buy something or to figure out if say looking for a doctor, for example, what do? You go out and ask people, right? Who is a good doctor, or who is, which TV should I buy, or which gym should I go to? Similarly, you ask around in your friend circles or on social media to as to who is a good financial advisor, or go back and see the competency of certain financial advisors, right? Start talk to 10, 15 different advisors and understand their approach as to how they work, and what kind of strategy do they use, and what is their thinking, right? Because see, take a simple thing. Most advice, see, I'm not going to talk. You have to see that what is the advisor trying to sell you, right? Is he trying to sell you higher returns, or is he trying to sell you something else, right? Is he someone who focuses on risk, who focuses on financial goals, who focuses on ensuring that near-term risk is taken care of, like who focuses on things like insurance, emergency fund, and stuff like that. So for that, you also need to have a basic education, right? You can't really figure out who is a good advisor if you don't know anything about finances at all. Then you have to go by word of mouth only. So these are the few things that you should ensure. Again, talking helps, and you start talking to a few advisors and understand. Don't work, again, we tell all our people who approach us, right? Don't work with us, but work with a financial advisor. It will definitely help you and add a lot of value in, when you take a 20, 30 year period. Problem is that with financial advisors, results are always back ended, they are not front ended. You will not know in the near term, in 1 to 3 years. I will just give you a very small example. In one of our clients, recently they bought a health insurance in the month of August, and then they had a claim in the month of September, and they got 100% of their claim. And if they didn't have this health insurance, they would have to take a personal loan and pay for it, right? So these small things matter when it comes to financial planning.
Great, great. Yeah, Nishant, anything you have to add on your part?
So financial planning is important for everybody, and lot of people who are working in financial services industry, they think that they know everything, but the truth is they only know mm, about their core job. They do not understand about financial planning. So they all should consider financial planning. Recently, we have onboarded a client. He is a very senior level person, retired from one of the big four audit firms, and he has a net worth of more than 15 crore rupees. And he is a chartered accountant, rank holder, all India rank holder chartered accountant. And he himself confessed that I made a mistake of living in an illusion that I understand investments. And now I have realized that I need a professional who is just managing investments for other people. So that is very important for anybody. So a lot of people who are working in financial services industry, what I have seen is that they have not taken any recommendations from anybody and they manage their finances on their own. So I have not seen anybody who is working in a private sector bank approaching us. I have not seen anybody who is working in asset management company approaching us. I have not seen anybody who is working in any insurance company approaching us. So I think it's a big a mistake on their part. They should approach financial planner, and they need financial planning as much as any other person.
So, Prince, one thing I would highlight is that we have seen at least 95% of our clients before they came to us had a LIC policy or a ULIP or an endowment plan, right? And this is just because of the mis-selling that's happening and the lack of financial education, right? So this is a beautiful thing to highlight, and you go and ask anyone, everybody will have a financial policy. It's like it's LIC policy, it's in every house. And health insurance is something most people don't have. 99% of our clients didn't have a health insurance, right? So जो रहना चाहिए people don't have, जो नहीं रहना चाहिए they will have a lot of it.
But this is one thing, like every person has a relative who is an LIC agent, and yeah, that's happening with every one of us. And
Correct.
people are ignorant
True.
of their health insurance and say term insurance thing. So it was a great session, Neeraj and Nishant. And as we say, humility is the essence of life. And as soon as we realize that we do not know everything, we will be well placed in every facet of our lives. So basically, and there is no shame in accepting if you don't know anything. Say, if I have some expertise in some domain and something related to that also, if I don't know, so I should be okay saying that, yes, I don't know. So likewise is for financial planning and personal finance. Yeah, I mean, if you are, as Neeraj was explaining, if somebody is working in, say, banking, insurance, or say some kind of stuff, and they think that they are good with their financing, so that is basically ignorance. And I have seen even RJ sir was his wealth was managed by other people. So he also had a financial planner, right? So the importance is the upfront very very minimal in compared to the long term wealth building with the help of financial planning. So it was really great to have you, Nishant and Neeraj. Thank you guys for your time, and surely we will connect again also. Any closing remarks on your part? And guys, I will request each one who is attending today to kindly check their handles and do connect with our handles, follow us, so that as and when we have next set of sessions, so you guys can also tune into that. And again, we also place our podcast over my YouTube channel, so in case those who missed some part or join late can also revisit any point in time. Yeah, Neeraj and Nishant, over to you.
So thanks, Prince. Thanks for this opportunity. You are also doing a great job by hosting all these spaces. I have heard a lot of spaces personally on YouTube, right? I don't really get to listen to them live. And that's when I mentioned to you earlier also that you're doing a great job by putting them on YouTube, because that's when the time spent by experts is justified. Otherwise, if it is lost, then it makes no really makes no sense even hosting these events. And secondly, on holistic wealth, guys, if you are interested in financial planning or looking for an advisor, just want to talk to someone, ping us, DM us. We'll set up a call with you and talk to you, and also will run you through the services that we provide.
Thanks, Neeraj.
Thank, thank you, Prince, and you are doing a great job, as Neeraj has mentioned. And anybody who thinks that his finances are not in place, they should definitely get in touch with a financial planner. Not compulsory with us, with whomsoever they are comfortable with. But I can vouch for it that if you get in touch with a financial planner, he will add a lot of value in your overall life.
Great, great. So thank you, Nishant, Neeraj, and guys. See, these spaces are purely educational, and our guests are spending their time so as to educate you and spread a word. So there are no commercial involved, no, I mean, what sales or sales pitch. But again, you can always feel free to contact, and in case your requirements echo with the talks or presentation which the financial provider provides you, you can always connect, because if the upfront cost is say 5.5 or 1% of your total net worth, and down the line, as very rightly said by Neeraj, that the wealth creation is back ended on this level. So you can always consult, not necessarily anyone in specific, but again, who can understand your requirement and can help you with your goals, you can always connect. And you should be very, very, I mean, careful when it comes to managing money, because losing it on your own is not a good choice. Rather, paying a small fees in comparison is a better choice. Yeah, thanks again. Thanks for connecting, guys. And the recording will be available on our handle. And those who missed, they can always revisit. So Nishant and Neeraj
Thank you.
surely will connect sometime
Bye.
also. Yeah. Thanks. Thanks. Bye. Good
Definitely.
night.
Bye.
Take care.
Bye.
Take care. Good night, everybody.